I'm Amy Northard and I'm the accountant for Creatives. Today we're going to talk through some of the basics that you should know if you're going to DIY your own books in QuickBooks. So let me share with you my screen. This is a sample company. I'm not disclosing anyone's financial information, but we'll use this as a way to illustrate how to get set up. So the first thing you'll want to do once you get logged in is connect your bank accounts to QuickBooks. So button over here for you to press, but if you don't see that, you can go to Bank Transactions. And from here, you can link your accounts. So you'll want to connect everything from your checking account to your credit card. If you have loans or anything like that, go ahead and connect those. PayPal is one of the only merchant processors we recommend our clients connect for their bookkeeping in QuickBooks, but you may have others. For the ones that we don't have them connect, like Shopify and Stripe, we do journal entries each month to record that information. So if that's something you want to hear more about, leave me a comment and I can make a video about that as well. So from here, you'll just click your bank. Since this is a sample company, it won't let me get very far, but you will just follow the steps, use your bank login information, and then once you have it connected, you'll be selecting how far back you want it to go. So I recommend having it go back to the first day of the year. If you have multiple years, you may have to manually upload transactions. And if that's the case, you can come over here to this drop down and upload from a file. That will allow you to go to your bank, download the CSV file, organize it a little bit, get rid of some of the, random columns, and then they have instructions for uploading it, and you'll essentially match up the columns to the different fields in QuickBooks to make sure that the information goes to the correct place. Once you do that, they will show up in here just as if you had connected it and they imported that way. So you'll want to go through your transactions each month. I would do it at a minimum on a monthly basis and give everything a category. So this Books by Bessie, let's say that is her accountant doing bookkeeping. There's a bookkeeper category. So you can select that and then click add. And that will add the transaction into QuickBooks. When it is just hanging out on this page, it's essentially kind of in like a holding zone. So you won't, if you go to the profit and loss report, you won't see these transactions there. You actually have to physically add or match the transactions to get them to show up on your reports. So you'll go through all of that. If you come up to something where you aren't sure how to categorize it, I would recommend just thinking of the best description. You don't need to create a category for every single different software that you use and get into that kind of detail, but this one is a rental, like equipment rental. So I'll show you, they do have equipment rental, but I'll show you how to create an expense category. You can also do this to create an income category. So first you want to create the account type. There's a lot of different ones in here, but you're going to really focus on income or expense. And then we're going to call it vehicle rental. And then you'll hit save and close. The other information, the tax description, is not important unless you're planning to use QuickBooks to also do your taxes, which, since we are an accounting firm, we do our clients' taxes for the most part, but that's why I didn't address that field. So you'll see that it updated it to vehicle rental, and we still want to make sure to add that transaction. Another thing you'll notice is that QuickBooks is trying to be smart about the categories. So you'll see that it went ahead and said, okay, there's the same company. We're going to assume that it was also a vehicle rental from there. So if that's the case, go ahead and add it. But if it's not the case, then you'll need to update that transaction. I run into problems with that when it's things like Amazon purchases. Maybe it's not always supplies. Maybe it's something else. So I would make sure that the category is correct. And if you have a couple in a row that end up with the same category, typically, it didn't do it this time, but typically it will pop up with a pop-up and says, do you want to save this category? And then it will make sure that every time that comes up, it is categorized as that. And for some that you absolutely know, like maybe MailChimp, you know there's no way possible it's going to be ever categorized as anything different, you can have it auto add the transactions, which means in the background of the program, they will assign it a category and they will already go ahead and select add for you so that it doesn't even show up on this page, but you will see it in your financial reports. I would be careful with that, but unless it's something that you absolutely know will always be the same every month, then you can go ahead and use that feature. So you want to go through every month, fill in the categories for all the transactions, and when you're done with that, then you'll need to go through the reconciliation process. And this process is probably the one that's most skipped. So you can watch their tutorials, but we're just going to skip out of them. You will want to reconcile all of your checking accounts, savings accounts, credit cards. We as accountants also reconcile loans and some other accounts, but the checking, savings, credit cards are going to be the main ones you want to do, like PayPal as well. You'll want to do those each month. So you can select each category or each account, and it will show you. There will be a date up here if you've done it in the past. So if you're like, man, I don't remember if I reconciled last month, it will show you. So no date is showing up here because it's never been reconciled. So you'll grab your bank statement for the month and you'll want to look at it. Let's say we're going to do January. So the bank statement ended January 31st. And it says the ending balance for that month was $4,035. And you will grab those from the actual bank statement. Then you'll start reconciling. Now this one's not going to work because I don't have their actual bank statement for this account, but it'll give you a good idea. So there will be typically a lot more transactions in here. What I recommend doing, especially for the first couple times, is you might want to print out your statement, get a highlighter, or put it on a screen and use the highlighter tool. And every single time you mark off a transaction in QuickBooks, go to the statement and mark that exact same transaction off on the statement. At a certain point, these will start to automatically auto-select until there's a $0 difference. And that's awesome. It literally will make it take 2 seconds. But when that happens, you'll want to see, were there any unselected towards the middle of the month? It would be normal to see some unselected ones at the end of the month because those might show up on next month's bank statement. But if there's ones unselected around the beginning or middle of the month, you'll definitely want to look into them. That typically means they were duplicated transactions or transactions that didn't get dealt with in the previous month. So once you have everything selected and marked off and your difference shows as 0, then you will save it and close it. I'm going to close without saving, but you'll save it and close it, and that will save the reconciliation. And then you'll go down to savings and you'll do the same thing for that. And they will start to get really fast once you've done a couple of them. So that would be kind of your general workflow for each month. Again, if you have things like Stripe or Shopify, you will want to do a separate journal entry to record those. I don't recommend syncing QuickBooks to those accounts because in almost every single time I've seen it done, there's duplicated sales information in QuickBooks. So it just ends up being a costly mess to clean up when we get to that point. Once you have done your bookkeeping for the month, the 2 reports I typically look at are the profit and loss and the balance sheet. And what I like to do, let's say we did our bookkeeping through April. I like to look at my months compared, and almost all of you will file with a cash basis. There will be some that do accrual, so just be aware of what you're selecting here. And I really like to see the months compared to each other so that I can look for trends. I can look to see, maybe I want to see how much I paid my accountant and the monthly fee there, or what supplies are costing. Maybe I had a big jump in April because this landscape business, the weather got nice and they were able to do some work. But just make sure that the expenses and their patterns make sense throughout the year. That's one thing that we are looking at when we review bookkeeping is, are the wages pretty consistent, or did they have a giant jump? Maybe they did bonuses and that accounts for it, but maybe not. And so that would be something we would look into. Same with income. Checking for patterns. This will also show you what things are bringing in money. I would not just have everything lumped into a sales account. I would really take some time to separate that out so that you can see all the different income streams in your business. You can see what's maybe pretty lucrative and maybe what is a big time suck, but it's not making very much money. So those would be ways I would recommend structuring that. Let's go look at the other report here, which is the balance sheet. You have a way of kind of favoriting the reports. So if you just want to have these two main ones up here, you can click the star. Balance sheets are essentially a snapshot in time of your accounts. So profit and loss is going to show you the activity in the business over a period of time. But the balance sheet is just, right on this day, here are the balances of the accounts. So let's look at last month. We'll select cash again. If you want to compare to the previous year, you can do that, but we're just going to look at the current year. So some things to look out for here would be an undeposited funds account that is more than probably a couple $1,000s. I have one problem when you do start to sync like Shopify and Square and Stripe is that this undeposited funds account can get huge. So what it is if a client pays you, let's say you send a QuickBooks invoice, they pay you, they pay the invoice right away, but it takes a couple days to actually show up in your bank account. So there's that like flux time where you've been paid, but you haven't received the funds. They're undeposited. So this is where they hang out. There's kind of a no man's land, and this is where they go. When it shows up in your bank account, then this account gets reduced and your checking account increases. So that's how all of that works. If that is big, then I recommend reaching out to an accountant to help you get it fixed. You'll also never want to see negative checking or savings accounts. There may be the very rare instance where you overdrafted and you do have a negative account. And as long as you know that's the case, that's fine. But in general, these shouldn't really go negative. Same thing with credit cards. Credit cards especially. I have seen a couple times where people have overpaid their card, or maybe they paid it off and they returned something, so that balance went on there. In those cases only, the credit card would show as a negative on here, but typically credit card balances are going to be zero, or they're going to carry a balance. So that's another thing, kind of a red flag. If you run into, you should be able to fix it through the reconciliation process, but if it's still showing negative after that, that would be something where I'd call in an expert to help you fix it. All right. The rest of these are loans. There's going to be some payable accounts. If you pay sales tax, you will probably have a sales tax payable account. Some of you will have payroll tax payable as well. If you're using a payroll software like Gusto, which collects the payroll taxes at the time that you run payroll, you shouldn't have a payroll tax liability. All of that money is taken from you at that point, and it's not something you have to owe in the future, which is what a liability is. So if you're using Gusto or something like it, which withholds the taxes at the time you run payroll, you shouldn't have a payroll tax liability. If you do, that means something is wrong. There can be all different kinds of liabilities, but the credit cards, payroll, sales tax, and loans, those are going to be the main ones that you're going to see. So that is the balance sheet in a nutshell, and just some things, some red flags that I would look for as you're doing your own bookkeeping. There's a lot more here. There's ways to send invoices. You can do payroll. You can track time. You do have to upgrade to one of their higher packages for QuickBooks to do budgets, but that's in there as well. So they have a lot of different options there. But hopefully this gave you a good basic overview of how to use QuickBooks, especially if you're DIYing your books. If you have any questions or specific things you'd like me to cover in the next video, please leave me a comment down below. And thanks for watching.